Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack, today is April 14th, and today's episode is going to cover a whole lot of things, beginning with some Rocket Pool stuff about the oDAO. We're going to be talking about new on-chain vote. We're going to talk about the star update, give an update on that. On the Ethereum side, we're going to be talking about staking ETFs and the news about that. We're going to be talking about some Ethereum values, Fusaka roadmap, and a whole lot more. So let's get started.
10, 9, ignition sequence start, 6.
Okay, so the place to begin today's episode is here with this update from Langers saying, hey everyone, and this is about the oDAO and some people being disappointed about how long it took the oDAO tree to get generated last week, and basically showing that some oDAO members were probably not online. So Langers says, as you may have noticed, last week the oDAO reward tree generation process took longer than usual. Several nodes did not produce tree submissions, so the oDAO and team have been investigating. It appears that with the reward tree version 10, there's an incompatibility with Lighthouse in its default mode. Lighthouse needs archive mode to serve state that the reward tree process uses. The Lighthouse team has helped the oDAO diagnose the issue, and we should be back on track. The team will put together a dry run process so the oDAO can be confident everything is set up for the next interval. Let me know if there are any questions or concerns. Many thanks, Rocket Pool. So this is obviously really good in that, we will be back on track next month. By then, I think we will be on the smaller oDAO membership with 2 team accounts leaving and also 1 Gitcoin account leaving, membership leaving the oDAO. Now, it's a shame that, it takes something to go wrong in order to notice that there was something wrong. But I guess the good thing here is that, the issue was identified and it's going to get fixed, which of course is a good thing. Okay, next we have news of a new on-chain vote, and here is Dr. Doofus sharing information about this in the ping server, saying the PDAO vote proposal 3 is live now. The on-chain vote is for increasing the GMC share of the oDAO, the PDAO budget in accordance with RPIP 69. See here for details. And it says, please remember to vote on this proposal. If you have delegated your votes, you can always override it in phase 2, which starts on April 19th. And then there's voting instructions on how to do that. You just run Rocket Pool PDAO proposals vote in your smart node, and then follow the instructions that come up there. And if you want to vote with your hardware wallet, you can just go to node.rocketpool.net/vote for that information as well. So like I said, this vote came online a little while ago, and actually let's just go to the events DAO to get the information of what's going on. So the vote went live, and Halulu was the first person to vote. After that, we had Dr. Doofus, Shifrin, and then we had myself, Ramana, Fornax have voted so far. So we are currently around 52% quorum, and the vote, of course, is going to run for another 6 days, I want to say, something like five more days. So yeah, you can go and vote on this now if you are interested in voting on it, and if you want to override your delegate, then you can do that from the 19th. Like Dr. Doofus said, this is a vote to change the way the GMC their money works. So yes, pretty cool. Actually, let's talk about an interesting discussion that just came up in trading a few minutes ago, and this is about people checking the payout and whether it's all looking good. So here, Halulu said, he says, it says, it's a little scary that no one seems to have checked my math for the GMC budget. Shifrin says, is it wrong? Dr. Doof says, if you don't do it wrong, we don't need to check it. And Halulu says, no, I think it's right. It's just scary that it's just me putting a number out there and everyone's voting yes. Seems close enough with quotations. And then Gator says that's a DAO moment and Halulu DAO. And basically I said that Valdov said that he looked before voting, and Halulu says, I did write a forum post at some point explaining every single parameter and how I calculated it. He says Val's also explained his working out when he voted on the last one. And then Shifrin says, I used the same numbers from the post 20 days ago here. And I said, I looked before voting. And he says, do you mean you check the payload. I said I looked at this, events now when it came up in the payload. I said I compared it to numbers in the forum post, and Lou said, but did you check that the forum post numbers make sense in the first place? And I said no. So yeah, that's yay, modern DAOs. No, but thankfully a lot of other people have looked over Lulu's math, I think, and maybe it's right. But yeah, I thought that was kind of funny / a little bit scary. So yeah, check the numbers, guys, if you want, Okay, we have an update from SignalXU about the Star program, and we've got an update. So he says drafted a proposal for the OP superchain ecosystem, suggesting that participating L2s allocate a portion of the treasury ETH to stake and support Ethereum mainnet. Plan to submit it to the OP forum in the coming days. So he says he's been in touch with the Reserve protocol. Their primary concern is developing the plugin needed for base integration. Yield and incentives seem to be secondary for now, and then there's some information there. He says Resolve is still reviewing the RETH basket proposal. No concrete feedback yet, but he's going to follow up. And he said they reached out to AP13 DAO about potential collaboration. They're reviewing things internally, waiting to get connected to the right person. So that was a nice update there from SignalXU about what's going on with the Star program. Hopefully we'll start seeing some really good stuff coming out of there soon. Okay, we got an update from the Optimism and the campaign that they did for trying to boost liquidity. So it says Optimism ran one of the first real world experiments with Futarchi, I'm not sure what that is, where decisions are made through structured play money forecasts of measurable outcomes. And it says here what happened. So it says Optimism used the Futarchi, I'm sure I'm pronouncing that incorrectly, to allocate real grants. 431 forecasters placed over 5,800 on-chain trades to estimate which protocols would most increase superchain TVL. The projects with the highest estimates received 100,000 OP tokens and grants. And then the projects with the highest estimated TVL increases were Rocket Pool, Superform, Balancer and Beats, Avantis and Polynomial. So no complicated votes, no central committee, just forecasts and funding. So yeah, they put the money towards it, and Rocket Pool's funding, TVL went up by 59.4 million on the Optimism chain there. So that is actually really, really cool to see. So then they're saying that this matters. You didn't need to be a governance expert, no need to lobby delegates. You just had to show up and forecast well. That's governance with low barrier to entry. So they're actually really happy about this. So yeah, it's really, really awesome to see that Rocket Pool was number one here. And hopefully this means that they'll keep giving us more incentives in the future. That would be nice. Okay, today we had a community call, and this community call was with Factor.Fi. So they were sharing some exciting RETH DeFi strategies and details about the incentives feedback program. So they've actually got some really cool tool called Studio, Factor.Fi Studio, and this lets you create DeFi recipes using their plugins and their paths, and you can put them all together to do something like really cool, and then you can execute that. There were some good questions asked by Ken. It was quite a quick call. I think it was like 30 or 40 minutes in total. Yeah, they'll be looking for the best paths that people create and putting incentives in there for them as well. So it looks like you can come up with some nice recipes. There's some difference in the protocol between people who just use the recipes and other people have made the recipes. So you can look at all of that stuff and figure it out yourselves. But it's quite intuitive. It looks like it looks pretty nice. You can just drag and drop the different actions and then you can stack them all together. And each time you do that, it makes a vault for you that it will execute it in a batch. It looks really good. So definitely have a look at that if you're interested. Yeah, do so at your own risk, of course. Okay, so the IMC put out the report. So this is Samus putting out his report for period 34 and the period 35 budget. So Samus says that the IMC continued spending the budget cut. So we got 11,500 inflows and 11,200 outflows, collected some rewards from fees on the protocol-owned liquidity positions and used that to further increase protocol-owned liquidity. So budgeting summary is the RPL balance. So change, so 7.6% change. So that went from 3,300 RPL to 3,500 RPL. Extrapolated months to zero balance. There's infinite because we are currently spending within our means. And then for budget 35, There's it says should match period 34. No notable changes planned as of now, and liquidity looks stable on mainnet. There's something interesting happening though that people from Bunny have pitched to Rocket Pool, and there's an interesting discussion that's happening with that, and I'll let you all know if there's anything that changes with that. They've got this idea of trying to grow protocol on liquidity and using the fees generated from there to pay for incentives for our ETH liquidity. So they've got an interesting proposal. I'll still talk to them, and I'll let you guys know if anything comes from that. Okay, we got a nice little update here from JT about using flat money. So he says he converted his ETH to our ETH back in June and then parked it in flat money and minted a unit. And he said left it there for several months and then needed to pay some taxes from last year. Decided to look at how it was going and then ended up cashing out a bit of it, converted it back to our ETH, and right inside the interface, I went straight to base and turned it into USDC. He said then I sent that to an exchange and cashed out and put it in my bank. I had way more yield than I was expecting. So basically, I'm not really out anything from last year in terms of cashing native ETH to pay my bill. It's a win-win for me and a win for the US Treasury. Thank you, Ethereum. So here I said, flat money has been printing money since ETH has been down only, but you got to be careful swapping your ETH into unit if you think the price is going to go up. It's really amazing product though. Wish more people understood it and used it. And then here, Fi Marhal says, I definitely use it if I understood it, but it's on me. I also think they put a frustratingly little effort into making it accessible. I said, did you watch my explainer episode into it? I did take off into DeFi with the guys from Flat Money. And he says, I'm too small brain for videos, but I chucked the transcript into Gemini and I think I finally get it now. So yeah, Flat Money, remember that it's not free yield. Like you basically provide your collateral and then mint unit, and that is people use your crypto to go leverage long, and that's how you make your money. Now the thing is that because you're going into unit, that means that if the price of ETH goes down, then you get more unit back. Your unit, when you swap it back, you get more RETH back for it. However, if our ETH price goes up in the meantime, then you get fewer RETH back when you sell your unit. So you're basically removing the volatility of your RETH. Like you're taking that away from it, and you're just getting the unit yield. So as long as you're aware of that and you understand what you're doing, there's some of the rates that you've been getting on unit have been absolutely amazing. Actually, let's just have a quick look at Flat Money and see what's going on with it, because it's been a while since I've had a look. So currently unit is paying out let me see, 56%. So the like I said, the yield that you can get on unit is actually like pretty incredible. Please understand that there are risks involved with all DeFi. So it says unit is a flat coin that captures revenue from perp trading and funding fees. Preserve your purchasing power and offset volatility with crypto markets by minting unit. So for example, if you had gone in a year ago with your RETH and deposited it at $4,000 for example, and then minted unit, now because ETH has gone down so much, RETH has gone down so much, when you go back to sell your unit and get RETH back, you'll get a lot more RETH, but you'll also have earned that lending rate on top, and that's a variable rate. So you don't get that, that won't be the case all the time, but you will get some. So yeah, it's a really interesting product. Go check it out. Okay, moving on to some Ethereum news now. So about Ethereum news, on Friday's episode of the Daily Gwei, Anthony Sassano said that he's basically burned out, and his episodes that he's going to be making of Daily Gwei are going to be more sporadic, and he's not even putting a guarantee on the time on that. So it's fair enough, totally understandable. Like, he's been at this a really long time. So I think I'm going to start covering more Ethereum news again, just to act kind of as a bridge. And the kind of news that I provide is very different from the news that Sassano provides. But I think it might be useful for some of you all. So we're going to start with this news about ETFs on ETH staking, and this has led to the SEC has delayed their decision on this. So they normally have, a lot of time that they can do, they have before they make a decision. And I guess, people were thinking that, hey, with this new SEC, they're just going to approve it right away. But that's not the case. They are saying that they want to delay, and they want a longer period for commission action and proposed rule change to amend the Grayscale Ethereum Trust ETF and Grayscale Ethereum Mini Trust to permit staking of the Ether held by the trusts. So remember, this is an amendment of the existing ETF. It isn't starting a new ETF. So I guess the SEC just want to kind of like figure out what's going on with this. Once the SEC approves this, I wouldn't be surprised to see all of that ETH get staked and, that they have in their trusts, or a big chunk of it, I guess, to allow for some to be liquid. And then I wouldn't be surprised if the other major ETFs file for these same rule changes. But that's definitely going to be one to keep an eye on. Okay, Nixo had an update about the latest all-core devs call, and this is from Thursday. So Nixo says today's all-core dev call agreed set of EIPs to consider for inclusion for Fusaka and declined for inclusion the majority of the EIPs proposed for the fork. The reason for this is devs want to ship PDAS, which is scheduled for inclusion, SFI, as quickly as possible. So keeping the scope tight is our best shot at doing this. The EIPs that were DFI'd will have to make their case for Glamsterdam next, but we'll worry about that fork after Pectra has shipped. And then here's the full information that you can see. So proposed for inclusion, there's a whole lot of EIPs here, this is really good that this is happening. Like, Fusaka still got a launch date for the end of 2025. That would be really, really good if we can get it, in November, December, like October, November 2025 would be fantastic. Like, I think it's going to really help Ethereum go up a level. So amazing stuff. Okay, Thomas has been talking about the roadmap as well, and people, of course, Ethereum price is down, everything's down, but Ethereum's down the most, and people are kind of getting panicky, and everyone's got an opinion about Ethereum right now. So here, Josh Rudolph says, simplified roadmap, scale blob, scale the L1, improve the user experience. And Thomas actually replied to this, which is really, really awesome to see Thomas like really getting in the weeds. Everything I've seen about Thomas so far has been absolutely amazing. Like, people are able to get some of his time. He's replying to DMs, even like, what you might think is like trivial stuff, but he's letting people know that he's there and that he's listening to what people are saying. And, when there's tweets going out there about Ethereum, I see him in the replies all the time, which is absolutely amazing to see. So he says mostly this is based on lots of convos. Other things are secondary, mostly not because they're less important, but should naturally happen as a result of those simplified roadmap stuff. It says existing culture and values in Ethereum are massively value generating. So he says Josh Rudolph is the roadmap czar. The secondary things after those simplified roadmaps are always mint assets on L1. I really, really agree with this. Like, this is huge. And the reason why this is because it just adds that base layer of security to the assets, but also it establishes Ethereum as the root of trust, which is of course what we want. So the idea would be that, if there's a token generation happening, for example, recently there was Kaito that launched on Base. Like, instead of launching the token on Base, what they should have done is launch the token on Ethereum mainnet, and then bridge that to Base and had everything happening on Base after that. But the root of trust for that token should be Ethereum, and that should always be the case. So that is really great that, getting this message out to people building on Ethereum is like, put your assets on, mint your assets on layer 1 and then move them to layer 2 after that. And then here, do we get more? Thomas says, win real world assets. At the moment, Ethereum has a nice lead with real world assets. We really need to keep this going. Win stable coins. At the moment, Ethereum has a nice lead with stable coins. We want to keep that going. Like, there's this huge boom in stable coins coming this year and next year. We really need to make sure that Ethereum is right at the front of that. We're going to be talking about real world assets a little bit later as well. And then comms improvements, clarity of expectations, greatly increased security expectations, like a $250 billion economy, and then goals driven R&D inside the Ethereum Foundation, and then aspirations, abstract future thinkers, DIAC, so AI, agentic protocol and foundation long term, which would be so cool that it will attract the greatest thinker over time. I think this is huge, and we should be doing this right now because you want to get ahead of the AI future kind of thing, and it looks like that is coming way quicker than people expect. And for us to get ahead of that now would be the smart thing to do. So add autonomous machines using Ethereum, that would be amazing. Human to human privacy, that would be so helpful. And open source society, that of course is one of the foundation principles of Ethereum. Now, Ethereum.org actually came out and talked about cypherpunk values and what they are. This is, you probably heard about people yapping about cypherpunk, but what exactly is it and why? What is Ethereum's specific brand of cypherpunk? And guest thread by Post Polar. So it says, when I'm teaching, I condense Ethereum cypherpunk into 4 key values: decentralization, permissionlessness, censorship resistance, and credible neutrality. So then explained what all of these mean, and a credible neutrality means Ethereum design and ideally what it is built on. Ethereum shouldn't favor anyone in particular. It should be fair. Credibly neutral is a unique contribution of Ethereum's culture introduced by Vitalik. And in some ways, I personally think credible neutrality is the one thing that all of these other things are built on top of. It's like the root value. All of the other things service there being credible neutrality. Like decentralization means that a product is so decentralized that it's credibly neutral, right? Like you can't say that there's going to be any kind of shenanigans, collusion being played there. With permissionlessness means that's credibly neutral, right? Anyone can use it. There's no permission to ask. There's no stops or hindering points for people. It's permissionless for everyone, like the base protocol. That makes it credibly neutral. And censorship resistant means, of course, that there's no way to stop. There's no way to censor, there's no way to stop people from using it, and that of course adds to credible neutrality as well. That's just my understanding of it. That's how I like to see Ethereum, as the ultimate in credibly neutral settlement, for everyone in the whole world. And then Post Polar goes on to say, different people define things in different ways. But this is a really nice thread about talking about what it means to be cypherpunk and how these values align with Ethereum and what we have now, and how they all kind of come together. So definitely give this a read. There's some really, really nice piece of information here and some really nice ways of thinking about Ethereum. But I'll let you guys all do that. Okay. Yeah, some of you might remember that I covered Emmanuel Awosika on Rocket Fuel a whole lot, maybe about a year ago, maybe even over a year ago. He had some really interesting takes about Ethereum, and I gave him quite a lot of coverage because I liked some of his takes. And at the time, he was saying that Ethereum needs marketing, and that he was going to do it. Anyway, he got called out by Evan Van Ness a few days ago, saying, "Hey, remember that guy who got 100 ETH from Vitalik and then peaced out?" Anyway, this accusation's kind of been coming up a few times over the last year, I guess, where a bunch of different people have kind of called out whatever happened with Emmanuel, and people not knowing what the full story was. Well, Emmanuel decided to step back from 2077 Collective and 2077 Research, which is the part of the money that he got went towards creating that. And then he said basically he's bowing out of crypto, Ethereum, and he is needed a break, basically. I think he was kind of hinting at personal stuff, but that was never made clear as far as I know. Anyway, he came out and he said that I made this decision a while ago, and Evan's tweet set off something, but it's not the first time some member of the Ethereum inner circle has tried to stage a public inquisition with me as the subject. And then he kind of basically says that, this is the first time the staff at 2077 are finding out, the people who are in that community. And there's basically it was a really long post talking about why he's leaving and why he's kind of stepping away from Ethereum. So this actually set up a whole lot of blowback with people for example, Gabriel Shapiro here saying, "You basically disappeared a month after raising funds. My company contributed, Vitalik did, others did, and you left after a whirlwind of posting and conference spree. It made it seem like you were going to be here fighting for Ethereum every day." And there was a lot of criticisms basically, and he was kind of fighting back. This person, Clouted, says, "Bro, you raised money and disappeared for a year, then came back and dropped something too long to read, but basically saying you were leaving crypto for good." And then Manber says, I don't know what to say, but I feel really sad at how the situation turned out. Vitalik was not wrong. In fact, the industry as a whole is jaded and in a weird state right now. Your efforts much appreciated. Evan says, honestly, I have no idea. As yesterday, I didn't know your name. My inbox is full of accounts who claim to be your ex-employees, calling you toxic and accusing you of malfeasance, and that they don't want me to screenshot because they fear retribution. Yeah, well, there was a whole lot back and forth, basically. Here, Kira said, Paulinia's last tweets were Ethereum modularity is going to win, monolithic is stupid, went away gracefully, not by doubting in Ethereum, like Emmanuel basically is. And here they kind of started a back and forth, so much so that Paulinia actually came back and replied. On April 11th, this is the first post in over a year. The last post was February 2024, kind of defending themselves and going back and forth. So yeah, it caused a little bit of a drama in like Ethereum circles. The reason why I'm mentioning it here, of course, is because I covered Emmanuel's comments quite a lot on Rocket Fuel back in the day, and I even kind of offered to help out with 2077 a little bit in my limited capacity. Sadly, I didn't have more capacity to help out, but yeah, there's a little bit of drama brewing there. Okay, yeah, sorry, this is just the post that we already saw. One of the things that came up out of that was David Hoffman kind of talking about how burned out he was and how the media landscape has shifted and he's kind of moved on from being an ETH maxi and blah, 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 all this kind of stuff. And then he was like, I'm going to go write a new article. And one of the things that he brought up, I guess, in his research that he's doing is like, he says, does anyone remember which Bankless podcast episode Justin Drake said, get off the L1? The L1 is not for users. That I can't remember. So then he, what happened is this kind of ties into this idea that people in Ethereum land have been like talking about for a while. I guess, since the roll-up centric roadmap really started to get pushed forward, and this idea of, eventually people won't be using L1s, we'll just be using L2s, and Ethereum L1 will just be like for settlement. It won't really be for execution stuff, and people won't be, actively doing stuff on L1. And I guess Justin Drake kind of updated his stance, which I thought was really interesting. And that's the main thing that I'm covering here. So he says there's two things that he wants to happen. He says we can scale the canonical L1 EVM by 1000x from 10 transactions per second to 10,000 transactions per second using ZK virtual machines. The core idea, validators verify a snark for every EVM block instead of re-executing it. He says, I'll discuss this on ETH Proofs Call 1, which is on Friday the 25th. This is the founders of 17 ZK VMs, snarkifying the EM, will share updates. If there's one white hot corner of crypto right now, it's ZK VMs. He says the pace of progress is mind-blowing. DM me or this other person for a calendar invite to ETH Proofs Call 1. He said, that said, most users will still live on L2s. He says, why? Because L2s will offer over a combined 10 million transactions per second, which is 100x up from rollups, 100x up from dank sharding, and 100x up from a decade of Nielsen's law. So the L1 EVM only gets 10k out of 10 million, so it'll be 0.1% of activity, and that's perfectly fine. He says the key to graceful horizontal scaling is preserving Ethereum-wide network effects. Native rollups, it has shared security. Base rollups have shared composability. Pristine ETH is shared money. He says Ethereum's future is incredibly bright. Believe in something. So that, of course, I loved. He says we need a name for Ethereum 3.0. ZK VMs are very exciting. And then, yeah, Michael says we should stop telling users where to transact. Just scale the L1 aggressively, let rollups innovate at layer 2, and the users will decide where they want to execute in the end. So this was actually a really interesting point that, like you can see, got a lot of feedback, a lot of comments, like strongly ratioed David Hoffman. But that, of course, is really interesting. And I'm convinced by Justin's argument, and I think it makes sense. I think, maybe us Ethereans went a little bit too hard on, hey, don't worry about layer 1, just let's focus on layer 2, and all the users should move over to layer 2s. I think that was a bit of maybe a misstep. In that time, what we should have been doing is telling users, come to Ethereum, come to Ethereum, come to Ethereum. And we should have been telling developers, come to Ethereum, come to Ethereum, come to Ethereum. And we are going to have a whole lot of space for those people very, very soon. I think, it's only within a matter of a year, 2 years at most, that all of Ethereum will be fully composable, or we'll have native EVM we'll have the native EVM rollups with, base sequencing. They'll all be using blobs. There'll be like hundreds of blobs for them to use. It's going to be really, really fun. It's going to be really good times ahead for Ethereum. And I think that sadly, right now people don't see it, but very soon it's going to be the case. Okay, there was a post from Stani, the founder of Aave, who says that we're beating all European fintech saving accounts. So if you provide the euro stablecoin, you can get 4.56% yield on that. And that's better than anything happening in any banks. So Stanley was quite proud of this. And Vitalik actually posted a congrats, which was really cool. He says, congrats on getting losses from hacks so low, 50 times below DeFi industry average and 250 times below centralized exchange average. According to a quick bot check, it says, given recent macro political and financial instabilities, I say you guys and DeFi in general are quite competitive with the tail risks in fiat land. So I think this was huge praise from Vitalik for Aave, Stani, and DeFi in general, like just for the amazing leaps and bounds that everything has come along in the last few years and the strong position that we're in right now. The next step is, getting these tools available to everyone, getting them accessible to as many people as possible. So if a person, is coming to Aave with $1 million, they get, really good treatment, of course, maybe on layer one. But then if you've only got $10, you can go to, or $100, for example, you can go to Aave on Arbitrum, Base, Optimism, or anywhere, and get just as good service. And that, of course, is pretty amazing for crypto and for people around the world. Okay, in some wider crypto, there was been some drama, big drama. It's like the story of the day that everyone was talking about. And this is a post from yesterday where Alifa is talking about a protocol called Mantra, and their token Ohm. And since if you're not bullish on Ohm right now, what are you even doing? It's going absolutely insane. So the chart here starts at 2024 at its lows are around, I want to say, 20, basically 13 or 15 cents, something like that, and going all the way up to over $6 yesterday. So that was looking pretty good. Like, it was a very, very, very strong performer in that time. And, things were looking amazing. However, that didn't last. Mantra crashed 90% since yesterday. Actually, let me show you that there's this chart here, and calls is saying I'm bullish now. It's basically down over 90%, 90% in the day. Let me see where it stands at right now, actually. Sorry, I'm doing this live. I should have done it beforehand. Right now it's at 52 cents. So it has gone down, 61 cents, sorry. So if you look at where it started the day, on 7-day chart, you can see that it was, sorry, it's slow loading. Yeah, on 7 days, it's down 90%. On 14 days, it's down 90%. On 30 days, it's down 90%. And on 1 year, it's down 10%. So we're going to talk about that next, actually. So it's come down really, really badly, really, really fast. And then there's this post here from Miko kind of talking about what happened. So it's a summary why Mantra crashed. It says millions of dollars were not lost because the dollars were not there in the first place. So they had crooked tokenomics, they had a misappropriation of funds, they had an investor dumping, they had a down candle, the market maker likely pulled out, exited, ran out of liquidity, and very low flow on non-organic price action. Price might have fallen, might have been artificially high. Even after the dump, it's still $1 billion at this time the person wrote their post. It says, as an advice for trading tokens or altcoins, manage your portfolio so that you can expect any position to go to zero at any time. So yeah, this is really, really bad. And it says here's some evidence of previous pumps and dumps. And this person on the 11th said, I believe Mantra is going to zero, sell everything, and sold all of theirs. So that's really interesting. They got out at just the right time. Yeah, so it was really bad. So it's basically $6 billion plus market cap has lost, I think 90+% of that and fallen down really, really hard. The fully diluted valuation still is above $1.1 billion market cap, which is still people saying are too high. Now, for those of you who don't know, Mantra was like trying to be a decentralized real world asset platform. And I think, to borrow a line from Mark Zeller and Aave, where he says just use Aave whenever something crashes. I think the idea is just use Ethereum because, you wouldn't. Well, I don't know. Like if there's fraud and theft involved in the system, then you can't avoid it really. But this is a horrible chart. I don't think that we've seen losses this fast in anything since Terra Luna. It's not quite on that level, but it's been a really, really, really bad day for Mantra. So yeah, I hope you didn't hold any. Yeah, and then this is just to stick the knife in. Here, Mantra went down 90% today, but the performance on the 1 year is still better than ETH. So like I said, Mantra on the 1 year is down 10% on the 1 year. And then if we look at ETH, you can see that ETH is, actually, let me just go here. And you can see ETH on the 1 year is down more than 10%. So if you had gone into a failed product like a Mantra and you were down, if you're holding it for more than a year, you're still up against ETH. So that just tells you how bad ETH has been, down 47% in 1 year. So not fun. Definitely not fun. Okay, and finishing today's episode, we're going to be talking about Kraken. If the page loads, sorry, my computer is being really slow. Seriously, yeah. Okay, let's go to Kraken. There we go. Okay, so Kraken launches zero commission trading for 11,000 plus US stocks and ETFs. So this is showing, of course, Kraken is one of the oldest crypto exchanges in the world. It's, I think, one of the oldest ones in the US, right up there, either just before Coinbase or just around the time of Coinbase. And it is now bridging with TradFi and bringing TradFi to their customers. Now, this isn't bringing TradFi on chain, however, I should be clear, but what they're doing is, I think, acting as a gateway to get their customers to using TradFi instruments on their platform, which I think is the next step, like in user acquisition and user retention. I think like the Robinhood model is, have stocks and crypto in one place. And I think that Kraken basically are like, hey, we can follow a similar thing and try to get our users to just come to Kraken and get access to these products, kind of like Robinhood. So it's interesting to see how that's going to go. I wouldn't be surprised to see Coinbase doing something similar very soon. And of course, the main thing that we want to see is that these assets coming on chain, having tokenized versions of these assets on chain, that would be really, really cool to see. Of course, with most stable coins being on Ethereum, most real world assets being on Ethereum, Ethereum showing that it's secure. Hopefully the destination for those will be Ethereum as well. So on that note, I'm going to end today's episode. So like I said, I'm going to start covering Ethereum news more regularly going forwards, unless, I also get burned out, in which case I'll just go back to Rocket Pool and staking news like I have done for the majority of this channel's existence. But yeah, if you want to come to get Ethereum news, then you'll be getting Ethereum news here every day from now on as well. So yeah, it's going to be exciting. It's going to be fun. And I'm here for it. So I'll see you all tomorrow. I hope you all had a good weekend. Thank you all for watching, listening, and being part of the Rocketville community. And yeah, I'll see you tomorrow. Bye.